Hello and welcome everyone. My name is Yasser and I'm your tutor for today's lecture, which is Business Environment and Learning Outcome 1 Understand different forms of legal businesses ownership. Hi, anyone is there? Can you see my screen and can you hear my voice?
Yeah.
Yeah. Okay. Who's there? Vanya? Hello, Vanya.
Hi, everyone.
Hi, Vanya. How are you? You okay?
Very well, thank you. Just managed to complete the registration and join in. I hope I'm not interrupting. Is everyone else here as well?
Yeah, that's fine. No problem. So this is your first lecture?
Yes, that's correct. First module, first lecture. Happy to
First module,
join.
first lecture. Oh, you're working towards IFA.
Yeah,
Oh,
absolutely.
all right. Okay. So just starting now, it's a business environment, and this lectures, aims to help learners understand the broader, broader businesses environment, particularly focusing on a legal business ownership. Okay. So unit aims, basically this unit aims to expand on financial accounting concept and delve into diverse business environment, specifically explores various legal forms of business ownerships, considering the needs of different stakeholders and their impact on decision making. Also, ethics in accounting and businesses are also, discussed, highlighting their influence on business decisions. Okay. Can you hear me and can you see my screen as well?
Yes, all works fine. Microphone and video perfect.
Okay. So indicative contents, type of businesses, organizations, private, public, government, voluntarily, charitable purpose, profit, growth, return on investment, ROI, sales, services, customer satisfaction, corporate responsibility, ethical considerations, environmental and social responsibilities. So these purposes are often expressed through vision, mission, aims, objectives, long and short-term goals and values, stakeholders, internal and external stakeholders, including financial institutions, lender, debtors, creditors, owners, managers, employers, customer clients, uh, government, trade unions, suppliers, and the community. So when we talk about objectives, uh, financial, corporate, and social, ethical, and environmental objectives, achieving business plans such as meeting customers' demand, ensuring repeat business through service standards, committing to suppliers through payment agreement, generating profit for owners, and meeting environmental goals. Potential conflict, highlighting potential conflict between objectives of different stakeholders. Organizational responsibilities, meeting legal requirement in the opening country or countries, safety of products and services, ethical practices, addressing potential conflict of interest. Any questions so far? Right. So this is 1.1, describe different form of legal business ownerships. Anybody can explain me different kind of businesses or their legal business ownerships? Okay. Sole trader, it is
Um,
usually, yes,
okay.
yes, carry on.
So I was gonna say to do with like sole traders, limited companies, like in partnership.
Yeah, that's correct. That's correct. These are a different kind of business ownerships and business types of businesses. So sole traders enterprises to operate as sole traders because this type of business structure require very little initial setup and management. Okay. So the owner of the company is responsible for informing HMRC, tax office. However, registration at company's house is not required. Okay. So due to the fact that the kind of business is not considered to be a legal entity in its own right, the owner of the firm is accountable for any and all debts and legal actions that may be brought against them. So the personal risk that is connected with this type of business may functions as as an incentive to register as a limited company, despite the fact that sole traders benefit from fewer laws and lower reporting obligations. The liability is limitless, quick and easy to use, the less filling, responsibilities. Then next one is partnership. Uh, when two or more people share ownership of a firm and contribute resources to the entity, the business is referred to as a partnership. The partner each receive a portion of the profit that are generated by the business or businesses. Within the context of general partnership, each partner is subject to unlimited liability. Creditors are not allowed to pursue the personal assets of limited partnership. Partners is in limited partnership to collect debts. Private limited company. Anyone can tell me private limited company? Uh, as far as the law is concerned, a limited company is a separate legal entity from the individuals who own it. So this is because the law recognized it as a separate entity. When a limited company is in operation, the responsibility of the shareholders restricted to the amount of money they have invested and any shares that they have that have not been paid for. This is significant advantage. Even if a limited business were to be dissolved, the personal assets of shareholders would not be put at risk. The limited company structure is one of the most common type of businesses structure in the United Kingdom. So both of you from UK.
Yeah.
Okay. So this is because limited companies offer restricted liability, potential tax advantages, and the simplicity of running as a limited company. Following the incorporation of the company, particular concerning the filing history and the appointments that are new in effect or made available to the general public on the register maintained by company's house. A level of transparency which is considered to be a key advantage when conducting business is made available to limited firms as a result of this disclosure of limited liability capabilities. Requirement of forming a private limited company, at least one director, the age of 16, then company must have a registered office in the UK, and in order to be a compliance with government requirements, the company name must be during the process of incorporation. Uh, uh, a minimum of one share must be distributed to shareholders. Then, any questions so far? All good? A public limited company or PLC, in addition to their private counterparts, limited companies are recognized as independent legal entities in their own right. In addition, the members' liability is restricted to the amount of money they have invested and the money that their shares are worth. on the other hand, in contrast to be a limited company, a public limited company allows its shares to be exchanged on the public market, which is frequently utilized for the purpose of raising capital. Sorry. So this structure is typically more suitable for larger businesses because the operating cost of a public limited company are significantly higher than those of private corporations. A minimum of 50,000 pounds worth of share must be issued for a company to be eligible of registration, uh, as a public limited company. At last, two directors must be selected in order to comply with the legal requirements. In addition to being run in a manner that is analogous to that of a conventional partnership, a limited company, limited liability partnership also uh, offers the advantages of limited liability. A limited liability is a business structures uh, that is valued in professions such as law and accounting, since its goals are typically driven by the pursuit of profits. As are designated members of a limited liability partnership, a minimum of two partners are required to be appointed, and it is these partners that are accountable for the day-to-day operations of the corporation, and our user-friendly software ensures that the formation process is uncomplicated, with your limited liability partnership being founded in an average of only 3 working hours. The structure of an limited liability partnership is slightly more complicated than that of a limited liability partnership. The process is still straightforward. There is no corporation tax in a limited liability partnership, which is the primary distinctions between a limited liability company and a limited liability company in terms of taxation. Uh, yeah. So, uh, if as a matter of fact, the members of a limited liability partnership will be required to file an annual assessment and pay tax on their personal income. This means that they will be exempt from paying any tax that would have been necessary if they had been operating a limited companies by shares. Companies House and HMRC are the two places where annual accounts have to be submitted, always having at least two chosen members is necessary for a limited liability partnership to continue to functions. The designated members are the ones who make the decisions for the company as a whole. They are also one who are accountable for operating the businesses on a daily basis and ensuring that the accounts are submitted on time. Key points: in order to achieve the objective of making a profit, the business is owned by partners. There must be minimum of a two authorized members. Partners are subject to limited liability. Members are required to pay tax on their personal incomes. Requirement to file accounts. Guarantee company, not profit. In short, limited by guarantee firms are companies that are not for the purpose of making a profit. All of the revenues that are made are put back into the firm, and they are used to accomplish the goals that organization has set for itself, which are frequently more benevolent in character. The members of this kind of corporations are not considered to be owners of the company, rather they are considered to be key decisions makers. One of the legal entities, limited partner that can be registered as a company house is a limited partnership, often known as an LP of limited liability. Partners can be persons or corporate organizations, and there are at least two of them involved in the businesses. There are two distinct categories of partners in a limited partnership, each of whom is responsible for a distinct set of functions and responsibilities. Each limited partnership is required to have a minimum of one general partner and one limited partner. Limited partnership, it is possible for the partners to be situated in any country around the globe. Nevertheless, it is imperative that the partnership has a primary place of businesses within the UK. It is comparable to a firm based in the UK having a registered office when compared to a general partnership, a limited, partnership distinguished by its official registration with Companies House, which sets it apart from the later. Generally speaking, general partnership consists of two individuals working together under the same business name. And one more distinction between this and a limited partnership, liability partnership, is that in an limited partnership, all of the partners do not have limited responsibility, where in a limited liability partnership, all of the members are protected from liability. The standards of for accounting and reporting that are imposed on a limited partnership are also distinct from those imposed on a limited liability partnership. A limited partnership is not required to submit a set of trading accounts to Companies House, whereas a limited liability partnership is required to submit a set of accounts on an annual basis. All of the income that is generated by a limited partnership is reported to HMRC in the form of a partnership tax returns, while the personal income personal income of the partners is recorded uh, on self-assessment tax returns filed with HMRC. Limited partnership have two types of businesses. Can be partners in limited partnership can be divided into two categories. Limited partnership is comprised of two distinct sorts of partnership. Each of them holds distinct tasks and obligations within the partnership. Each limited partnership is required to have a minimum of one general partners and one limited partners. So when we talk about general partners are individuals who are accountable for overseeing the day-to-day operations of the firms and direct their attention towards the management of the organizations. Due to the fact that the general partners have unlimited responsibility, it is possible to hold them accountable for the partners' payment of obligations that are incurred by the limited partnership. Uh, on other hand, when we talk about limited partners, in the case of limited partners, they make a contribution of a predetermined value, which may be in the form of cash or another form that is agreed upon throughout the incorporation process. Co cooperative. Cooperative is a business organization, refers to a commercial organization that is owned by a group of individuals and is managed with the purpose of providing mutual benefits to those in individuals. The individuals that are a part of the group are referred to as members. Both incorporated and unincorporated cooperatives are viable options. The following are some examples. Cooperatives for water and electricity utility, uh, cooperatives, banking, credit unions, and housing cooperatives. Charity in England. Uh, can you guys see my screen and no issues? Okay, a charity in England and Wales, a charity is defined as an organization that is created solely for the purpose of charitable activities and falls within the jurisdiction of the High Court's charity legislations. Uh, Purposes are the goals that your charity is established to accomplish, and they are elucidated in the documents that governs your organizations. In order to be considered charitable, the objectives of your organizations must meet the following criteria. They must be within the scope of the definitions of purpose. They must be for the benefit of the general public. So, organization structure is established by its governing document, which is the legal instruments that the established the charity and specifies the manner in which it should be managed. The type of structure that you select has an impact on the many aspects of your charity operations, including but not limited to the following: who will be in charge of it, and whether it will have a larger membership, if it will be able to enter into contracts or hire staff in its own name, whether the trustees will be personally liable for the actions of the charity. Any questions so far?
No, sorry.
Okay. Uh, there are four, main types of charity structure: charitable incorporated organization, charitable company limited by a guarantee, unincorporated associations, trusts. So, Charity Commission for England and Wales is a government department that is not under the, ministerial authority, and it is responsible for regulating registered charities in England. Charity Commission for England and Wales. Uh, Additionally, it is responsible for maintaining the central register for charities. Discuss the different types of businesses, activities, and secrets of sectors of operations that businesses operate within. There are three distinct sectors in which enterprises operate, including the primary sector, the secondary sector, and the tertiary sector. So, on the other hand, the primary sector is made up of businesses or companies that harvest raw material from the land or sea, which are then prepared for utilization by other industries. Asian illustration, so the uh, Aramco is the greatest oil producer in the world, and it's generate up to the $1 billion in revenue every single day. In the when we talk about secondary sector, in the secondary sectors, raw resources are transformed into product after being taken in by the primary sectors. Pieces of metal, touch screens, bottles, or even clothes, could fall into this category. The constructions industry, which is responsible for the production of building, and a factory that manufactures a product, are both included in this category. Example of this would be the process of refining, which involves changing or cleaning up oil extractions before it is eventually sold at petrol stations. The tertiary sector sells, finished products, responsible for selling finished products and services to end ensure the for profit. Both the Chinese fast food retailers, Manfudu, and and the South Korean department store, Shinsegi, which is the largest department store in the world, are examples of businesses that operates in this industry. So there are also tertiary industries such as the tourist and entertainment industry. Types of businesses. Uh, One of the three types of businesses is service businesses. So which is characterized by the provide intangible items, which are products that do not possess a physical form. Services companies provide a variety of products and services, including professional experience, advice, and other comparable of offerings. Some examples of services, businesses are salons, repair shops, schools, banks, accounting firms, solicitors, etc. So, merchandising businesses are another form of businesses that involve purchasing things at wholesale prices and then selling them at retail prices. They are called buy and sell enterprises in the industry. They are able to generate profit by selling the products at prices that are higher than the costs of their acquisition. A merchandising company is one of the that one that sells a product without altering its physical appearance. For example, retailers include supermarkets and convenience stores, wholesalers, and other type of, retailers, uh, mostly retail kind of businesses. Manufacturing businesses. Manufacturing businesses, in contrast to merchandising businesses, manufacturing businesses purchase things with the goal of utilizing them as raw material in the production of a new product. As a result, there is a change associated with the products that are purchased. Raw material, labor, and overhead costs are all components that are incorporated into the production process of a manufacturing company. The manufacturing goods will be offered for sale to consumers. The terms hybrid businesses refers to commercial enterprises that can be classed as belonging to more than one category of a businesses or business. So an example of this would be restaurants uh, that companies components in order to prepare a delicious meals. Manufacturing sells sparkling bottles of wine. Merchandising and fulfills the order of its customer service. Use of financial accounts, stakeholders. The financial information offer a copious amount of information that can be of great assistance to a wide range of individuals that utilize financial informations, investors, lenders, creditors, customers, and debts. So investors who are concerned about the risk and returns associated with their investment are the ones affected by the issues. Lenders, banks, and others financial organizations that provide loans to businesses need to have information that assist them in determining whether or not the loans and interest will be paid back when they are due. So, customers and debtors, customers are, creditors, in order to comprehend and evaluate the short-term liquidity of a businesses. Creditors include suppliers and trade creditors require information that provide them with the necessary information. Will the company be able to meet its short-term debts obligations when they become due? Customers and debtors have trade debtors have a need for information regarding the capacity of the businesses to endure and thrive. The fact that they are clients of the company products means that they have a long-term interest in the variety of products and services that the company offers. There is a possibility that they are financially reliant or on the companies for a particular goods or services. User of financial accountants, stakeholders. Any questions so far? Okay, employee, government, analysts, and general public. So employee, there is need for employees as well as organizations that represent them, such as trade union, to be provided with the information regarding the stability and ongoing profitability of the firm. It is the most utmost importance that they have access to information regarding employment opportunities as well as the administration of pension funding and retirement benefits. There is a good chance that they are likewise interested in the compensations and benefits that are offered to senior management. Government accounting information is of great relevance to a multitude of government agencies and departments which are located in the government sectors to assess and collect corporation tax. For instance, the government requires information about the profitability of businesses in order to conduct, its operations. Then analysts who specialize in investments are a crucial user group, particularly for companies that are listed on a stock exchange. In order to conduct an analysis of the competitive performance of a company and the industry in which it's operate, they require extremely extensive financial and other sorts of informations. Uh, General public accounting information is also required by the general public, which includes interest groups. These interest groups are formed by various groups of individuals that have a specific interest in the operations and performance of enterprises. Activities in the business, financing, investing, and operating. Investing activities and financing activities are example of activities that fall within the category of businesses activities. There are also activities that are not related to operations. So the activities that are considered to be operating activities encompasses the manufacture, sales, and delivery of the company's product. Investing activities encompass a wide range of activities such as the acquisition of sales of assets, which might include commodities such as land, buildings, equipment, and marketable securities. The operations, that are considered or to be financing activities encompass the receipt of cash from investors as well as the distribution of cash to shareholders in the form of dividends. Here is more, that explaining about activities. There are three type of operations that are make up the business operations activities, uh, investment activities, and financing activities. So, cash flow statement include a listing of the cash flows that are utilized and generated by cash of these businesses and activities. uh, Cash flow from operating activities as the first section of the statement, providing information about cash flow. So these in activities include a number of things that are included on the income statements and the current section of the balance sheet. The activities that pertain to investings are located uh, in the second section of the statement of cash flow. These are commercial and obvious that have been capitalized over a period of time that is longer than 1 year. Within this area, the acquisition of long-term assets in accounted for as a use of cash. The final component of the cash flow statement is comprised of operations related to financing, initial public offerings, secondary offers, and debts financings are example of these types of financing. Analyze the organizational responsibilities of an organization. Uh, a firm may be required to meet many duties which can be classified into CSR, social, environmental, financial, corporation, and ethical categories. Triple bottom line, CSR, corporate and social responsibility. What methods are available for firm and their stakeholders to assess the impact of CSR programs? Triple bottom line provides a means of approach. The TBL is a measurement that was first described by John Elkington, a British, business consultant. In the year 1994, the concept of TBL acknowledges that stakeholders from the outside view it as the obligation of corporation to go beyond merely producing money in the event that even that the accumulation of riches causes harm to the environmental of or causes individuals to get ill. Society will demand that the firm either change its practices or leave the community. List of employment laws in the UK. So there are different types of or certain employment laws in the UK. Uh, Employment Right Acts 1996, National Minimum Wage 1998, Employment Relation Act 1990, 9, Maternity and Parental Leave 1999, and Part-Time Workers Act 2000. So first one is Employment Right Act 1996 is a comprehensive statute that serves as an update to earlier labor law. It encompasses the rights of employees in various scenarios, including but not limited to dismissal, just unfair dismissal, paternity leaves, maternity leaves, and redundancy. National Minimum Wage Act 1998 is a piece of legislation that establishes the national minimum wage for both employees and businesses in the United Kingdom. Then Employment Relations Statute 1999 is responsible for establishing a variety of rights in the workplace, including trade union recognition, de-recognition, and industrial activities. Maternity and Paternity Leave Act, among other things, regulations 1999 are a piece of statutory legislation that governs the right of employees to take time off work for part-time workers. This legislation is aimed to preventing less favorable, treatments. Part-time workers feature of the United Kingdom's labor legislation known as Regulations 2000 mandates that companies must provide employees on part-time contracts with the same level of treatment as those on full-time contracts who perform the same responsibilities. Uh, a list of employees, again, transfer the following is a list of employment legislation in the United Kingdom. Here is a transfer of undertaking protection of employment regulation 2006. The rights of current employees as well as any employment contracts or promises that may be in place during the process of a company undergoing business transfers. So one of the acts that prevent discrimination in the workplace and throughout the recruitment process in the Equality Act of 2010, which was passed in 2010. This document specifies protected qualities that cannot be used as a basis for any decisions made in the workplace unless the decisions in the question is to make appropriate accommodations to accommodate the protected characteristics in the workplace. One piece of law that forbids discrimination against individuals who are employed by employment agencies. So this is Agency Workers Regulation 2010, which was enacted in 2010 when compared to full-time persons who perform the same tasks, they should be treated in the same manner with regard to compensation and working hours. Consumer Credit Act 1974 and 2006 relating to Consumer uh, Credit Act in order to obtain a license from the Office of Fair Trading. Businesses that provide consumers with goods or services on credit or lend money to them are required to be licensed. It is possible for the borrower to settle a regulated consumer credit agreement early by providing the lender with notice and paying the amount that is due, less a rebate. The sellers establishes rules that require information to be provided to borrowers or hires before the entering into a consumer act or hire arrangement. Consumer Act 2015, Consumer Acts, anybody, any questions so far?
None so far.
Okay,
None.
can you see my screen and hear my voice as well? Everything is good?
Yeah, I can. Yeah, I can.
Okay, so Consumer Acts concerning Consumer Rights Act, which came into effect on October 1st, 2015, brought about a number of changes to consumer law regarding the purchases of good, the definition of unfair condition, and the incorporation of digital content. The modifications are as follow: what should happens when goods are faulty, unfair terms in contract, What happens when a business is acting in a way which isn't competitive? Written notice of routine inspection to be given by public enforces such as trading standards. uh, uh, Greater flexibility for public and forces to respond to breaches of a consumer law, such as seeking redress of consumers who have suffered harm. So there should be a wider degree flexibility or public and forces, to respond to violation of consumer law, such as the ability to seek remedy of for consumers who have fallen victim or injury. Late payment of commercial debts, Interest Act 1998, Late Payment Act, of Commercial Debts Interest Act gives companies the authority to charge other companies consumers interest on amounts that are past due with their payments. This is possibility of charging interest, 30 days after the items have been given or the services has been finished. After the agreed upon date for payment, 30 days have passed from the receipts of the invoice, or the customers has been informed that the amount that is due is payable. The statutory interest rate to be charged is calculated by adding the base rate of the Bank of England of, here is 8%. Calculation of the interest is based on the amount that includes value added tax, VAT, and its straightforward annual percentage rate. Trade Descriptions Act 1968, businesses or salespersons who sells products or services based on misinformations are considered to be in violation of the Descriptions Act 1968, which made it is criminal offense. As a result of the act, they were required to be more accurate about their services or products, and to refrain from internationally misleading customers into spending their money on a claim that cannot be verified. Contracts, Terms Act 1977, contracts are regulated by the Unfair Contract Terms Act of 1977, which places restrictions on the extent of which one party can escape liability by employing exclusion provisions, such as disclaimers, notifications that would bring into existence contractual obligations are included in the scope of the provision, which applies to exclusion clauses found in the vast majority of contracts. Unfair Terms in Consumer Contracts Regulations 1999. The legislations pertaining to unfair terms in consumer contracts from 1999, 32. The unfair terms in consumer contract regulations, which is an ancient statutory instrument in the United Kingdom with the purpose of implementing the unfair consumer contract terms directive 13 by the /13 EC into domestic law. So examples of unfair contract law terms that allow the trade to ultimate change the characteristics of goods, terms that allow the trader to keep unreasonable amount of money as compensation if the consumer does not keep their side of the bargain, and terms that aim to take away the consumer's legal right. Uh, then analyze the advantages and disadvantages of partnership, becoming a limited company, or facilitate growth. Uh, Partner conduct an analysis of the business benefit and drawbacks associated with the partnership. Transactioning in onto a limited company in order to promote expansion, in the United Kingdom. A partnership firm is considered to be one of the most relevant choices for conducting commercial operations uh, in operation. By utilizing the business's partnership model, it is possible to enter into a business relationship with another individual without the perceived formality that in associated with a limited company. So according to a perspective that is less optimistic, when you have a partnership businesses, you are losing control of the path that your organization is going in without putting proper protection structure in place. Business partnership advantages and disadvantages. Obviously, when we talk about advantages, less formal with fewer legal obligations, ownership and control are combined, easy to get started, sharing the burden, access to knowledge, better decisions making. When we talk about disadvantages, unlimited liability, limited access to capital, potential for differences and conflict. Profit must be shared, whether profit the businesses makes have to be divided among the partners. Then finally, taxation, the way the business is taxed can be less favorable compared to other structures. Public limited company, various, among the various types and sizes of businesses that may be found in the United Kingdom. A limited company is one of the most common legal form. One reason for this is because it provides a multitude of professional and financial advantages, all of which are far superior to those that are accessible to sole proprietors or contractors who operate under an umbrella businesses. Advantages and disadvantages, limited advantages are limited liability, tax efficiency, professional status. When we talk about disadvantages, incorporation requirements, higher setup costs, director eligibility. I mean, you cannot be a director if you are disqualified or an undischarged bankrupt. So name restrictions, there are rules and restrictions regarding the choice of the company name. Then public disclosures, complex administrations, higher accountancy costs, professional accountants must be needed, leading to higher accounting expenses. And then withdrawal challenges, taking money out of the company can be more difficult, and it is subject to certain rules and regulations. That's it. Some references are here, website if you want to visit, you can go through. And yeah, that's it. Any questions, any concerns, any issues?
No, no. I would say it's okay. Yeah, I'm just gonna have to go through it again and
Okay, so
yeah.
our next lecture is tomorrow, 2 o'clock. So if you have any question, concerns, as you can drop me an email, yasir@ukversity.co.uk. You guys also have, I think so, WhatsApp group or my number. You can ask
Yeah.
any question.
I got added to the WhatsApp group. I'm just gonna see. Are you on the WhatsApp group already? Because
I don't think so. I am there.
okay, because UK Versity Online is on there
Okay.
and Ram and Deep is on there.
Okay, but anyway, you can drop me an email and you guys can message me. You have my number as well. If
Yeah.
not in the group, you guys have my number.
Okay,
So,
yeah.
okay, thank you very much, everyone,
Thank you. Yeah,
and have
thank
a
you.
nice weekend. And see you
You
tomorrow at 2 o'clock. Okay.
you too, thank you.
Thank you very much.
Thank you
See you
very much.
tomorrow.
See you tomorrow. See you. Bye. Bye for now.
Bye. Bye, everyone.
Bye. Bye.